Hello guys, my name is Harikaran. Welcome to Readist. In this video, we're gonna see about one of the best book I ever read in the past year. I would say that the name of the book goes "The Man Who Solved the Market." As the name suggests, this is a book about a man who solved the stock market. Guys, literally, he solved the puzzle of it. Like a stock market is a very lucrative thing where you can't predict what happen in the future. Like not only stock market, in another sector also, another economical thing, you can't know what will happen tomorrow. But here you use it and this formula and you also get it done. You know how, guys? That's the very interesting thing. Back in the days like 1980s, like stock market is like all, even before that stock market is rising. But that time, while Jim Simons was his end of his career, end of his 30s, I would say, he actually himself a mathematician. He was graduated from University of Berkeley, and he also done his PhD, and he was very keen on applying his logical brain, which is the mathematical brain in stock market. He was very keen about it, and he wanted to know the puzzle out of it, how to figure out the things and how to use the mathematics here. So he think, and he formed a group of smart people around who we know like Burley Camp, like some Harvard nerds, H department for. But he hire only top quality smart people, like typical nerd, like astrophysicist, astronauts, like the person who predict the space, common space, like space oriented things, and the extreme physicist and mathematician, statistician, and coders. He hired that stuff, that kind of people. He onboarded to his company. He started his company like 1980s, end of 80s. He named his company like Monometrics, which is the combination of two words, econometrics and money. And after that, he started to investing in stock markets. At that time, he was investing more in currencies like USD against GPR, like or against pound sterling, like that. He was investing in currency because he think currency is more predictable than stock. First time he didn't jump to the equity, the straight lesson. After that, he slowed down, he get the pace of it, he get the knack of it. After that, he invested in stock market also, and he raised fund, and he is the one of the pioneer in this quantitative trading. This name is, guys, quantitative trading, which just means they are using computer brain to churn out a large number of data and to predict the future of the market using that data. So they would collect like enormous number of data, like TBs of it, guys. I would say even PBs, petabytes of data. Like at back in that time, the accountability of it is quite very difficult, guys, to hold out that kind of data like stuffs. It's a very huge thing. Hard disk with space, it would take a space of a room, but it will store only 54 MB of worth of storages, guys. So it's very narrow thing. So that time the technology was not that evolved, but it's still growing rapidly. That's another thing. After that, he started his hedge fund and he's invested in many companies, guys. I think he's one of the most secretive company also. And after that, he renamed his company name from Monometrics to Renaissance Technology. I don't know why he chose his company name as Renaissance. I think he want to shows this Renaissance back in time, like stuff. And you know what? Another thing, guys, he was in the market since 1988, and he was still in the market, and he stepped down as a CEO from that company in 2017, I think so. First, he was started as a medallion fund. After that, it renamed as a Renaissance Technology. One of the key peoples are like Jim Simons and Larry Baum, James Sachs, Robert Mercer. Robert Mercer is the one who helped Donald Trump to run for White House, and he also did it in the past 2016. So this MIT graduate Jim Simons started a company called Renaissance Technology, and he also invested in equities. And the very curious thing about this guys, like he literally hacked, I would say, not that word like hacked the system, but he got a hack like a cheat code, I would say, cheat code to solve the stock market, guys. He get the data, he feed it into a complex algorithm which built by his team, like they use computers like supercomputers, I would say. They have really huge resources, guys, but they would spend like this vast computation power. They have a huge computation power, I would say. Like you would be very crazy about it. And they would invest according to the decision made by that system, made by that algorithm, what the computer has given as the output, the end of the pipeline of this coding, and they would invest as the company said. They will also automate the trading also. They let the company buy stocks and sell stocks. So on that thing, her company can buy thousands of stocks within a second. They can place an order like within a second, because stock market is a very time framed stuff. So even 0.001 second mismatch here and there'll be a hell lot of profit and losses on the other sides of the capital market. So he did it, and he did very well, guys. That's, I would say, very well, because working together with the smart people is quite different, guys. Making them to work on a single idea, it's even quite difficult. So he eventually did it, and after that, the rest is history. The main thing is the Renaissance technology has been through to the 3 to 4 most financial breakdowns, like 2000 dot-com bubble, 2007 financial crisis, and 2020 COVID-19, which was the major financial breakdown in human history for the past 3 decades, or even past century, I would say, after the World War. It's one of the big breakdown in financial, but even that time also Renaissance technology did very well, guys. The returns were outperforming the other edge market, I would say. The famous investor Warren Buffett, his return was 20%. Berkshire Hathaway's return since 1965 till 2018, that was very 20%. But Medallion Fund, Jim Simons, after fee return is 39.1, which is after fee. That is a net profit that goes to their company. So if they're investing 100 rupees or $100 in a company, their fees would be like $39 for that on the profit, guys. I'm saying on that profit. If they gain $150, in that $50, they will charge like a 39% on their for their fees. Like I would say like $12 to $13. So think about the huge amount, guys. They might invest like hundreds of millions of dollars. They can pocket in like more than dozens of dollars, more than 20 mils. So it can be easily done. Their return is 39.1% consecutively for 35 years. That's really a freaking thing, guys. If you invest $1 in Renaissance technology, that would be like $10 million in 2018. So think about the numbers, guys. It's very outperforming than the others. I am saying this without calculating the inflation, without putting the inflation in the picture. Think about the number. It's very quite high. And actually, the author of this book is Gregory Sokerman. And I don't know about his previous books. I don't know about his previous works, but he did wonderful in his book. So you should read this, guys. This book should be in everyone bookshelf. Sometimes you might feel it's very too dense to digest the information. Sometimes it go like too statistical thing, computational oriented, sometimes too technical terms, but it will help you, guys. It will give you a new dimension to know about the different dimension of the economics, guys. So that's it about the video, guys. So give me a like. Please do subscribe our channel. Until then, bye bye.